Hello legends, it's Guan here. Good to see all of you here today. I'm sure whenever you say you want to invest in stocks, your parents or friends would say something like,
Walao so risky. Invest in blue chip stocks lah. Sure can make money one. Confirm 100% guarantee. I tell you better don't lose my money ah.
Hey bro, investing very risky leh. Just stay on blue chip stocks better, man.
and then you on the inside thinking, and confused. So let's find out what blue chip stocks means in Malaysia and should you invest in it or not. Into the next segment. What is a blue chip stock? So blue chip stocks, no, not the blue chips in the casinos, but are typically large, well-established and financially sound companies that have operated for many years and that have reliable earnings. Whenever you speak of blue chip stocks in Malaysia, these names will pop up in your head. Maybank, Public Bank, TMB, Nestle and more. Notice that they all have similar characteristics here. Number 1, super large market cap. And you notice that their market cap is often in the range of tens of billions of ringgit. Number 2, they pay dividends consistently and very high dividend payout ratio too. Let's take a snapshot of the Malaysia blue chip stock history, particularly on British American Tobacco. So BAT's share price was as high as 63 ringgit per share in 2013. And then all of a sudden, the BAT stock was excluded from the KLCI index in 2017. In fact, take a look at BAT's share price in the past 5-year history. You have lost more than 70% your stock holding if you stay invested. This is possibly the saddest thing ever. There's obviously a reason why the share price dropped so much. Let's look at the financials. You notice that the revenue and net profit decreased year over year. The reason why I'm showing you this is because anything can go wrong, and they will likely go wrong at some point in time. Notice that this so-called big blue chip company's earnings growth is not going fast anymore. Worst of all, their financial performance is decreasing year over year. Stock prices will follow the earnings growth of the company in the long run. And you might ask, why isn't BAT growing their revenue and net profit fast anymore? Now before you answer this, be sure to like, subscribe, click the bell for more video every Friday. Alright, into the next segment. Reason number 1, gigantic size. You see, when a company gets too big, it often shows that they have already dominated a lot of consumers in the market. It's like you set up a food truck in your area and more than 70% of the people already are your customers. Who else can you sell it to? And this will often make the blue chip companies becoming more complacent in their position. Since they have nowhere else to grow and it's hard for them to continue to deploying cash to grow, they will just distribute a bulk of their earnings to shareholders as dividends, often in the range of 45% dividend payout ratio or more. Now going back to BAT, it's because they are so large and they did not manage to react towards illegal vaping and tobacco products that are cheaper priced, that ultimately caused their downfall in business performance. On top of that, BAT paid dividends to their shareholders every year, which then caused a lot of losses to existing shareholders as BAT could have used those dividends to go fight against illegal tobacco products. So now you see, being a big company doesn't necessarily mean it will surely win forever. Heck, just look at Alibaba's history. They were competing against eBay in the early 2000s, and eBay arguably was the hottest e-commerce marketplace at the time, valued at almost $80 billion. And look at where eBay is right now, only valued at half of its peak market value. And the precise reason why eBay's market value decreased was because, again, they didn't manage to outcompete Alibaba in the early days. Alibaba's Taobao took eBay by storm in 2006 and forced eBay to give up the China market. So you see, the agility of a company plays a huge role. Alright, into the next segment. Reason number 2, low innovation spirit. Ever heard of Nokia 3310 phone? Literally the mightiest mobile phone made in human history. And we all use it to play Snake. Don't say you never played Snake before. Oh crap. I'm so boomer now. And then our friend here, Steve, came out with a godlike iPhone that bombed Nokia out of space. As a result, Nokia's profit jumped down the cliff, and the same goes to Nokia's stock price as well. Nokia didn't manage to mobilize the development fast enough, and the rest is history. Let me tell you my personal experience. I invested in Hapsing Biscuit back in 2018 for around 1 ringgit per share, and I sold the shares in 2019 for 95 cents per share. Well, I didn't technically lose money as I was collecting dividends from them, and it balanced out the capital loss. But in this 1-year time frame, I could have just invested into Google or Apple or any other tech companies where I would have obtained 10% return per year or more to what big. So you see, I lost money not due to capital loss, but due to opportunity cost.
Hiya.
And this is because Hapsing Biscuit couldn't grow as fast as the big tech companies by the nature of the industry. I mean, what is there to innovate for biscuits? Unless the factories manufacture biscuits purely using humanoid robots then. Therefore, its share price wasn't growing much. Another classic example, Blockbuster versus Netflix. You see, Blockbuster was enjoying the number one market leader position, and they didn't do anything to improve user experience. And in fact, Blockbuster was known for their late fees, where Netflix heavily capitalized on and won many users over to their platform, evidently shown from their subscriber growth over the years and their revenue growth over the years. You can see the pattern here where Blockbuster was slow to respond towards innovation in the market, and Hapsing Biscuit couldn't grow fast due to the nature of the industry. Now, why was Blockbuster slow to respond towards competitions then? Alright, into the next segment. Reason number 3, rigid corporate culture. You see, rigid corporate culture, a classic example. Take a look at Tesla's corporate culture and that of GM's corporate culture. Tesla's corporate culture is always emphasizing on the rate of innovation, and employees are empowered to make their own decisions based on their professional judgment. This is the reason why Tesla has achieved many impossible feats. I mean, which automobile company has the capacity to invent a humanoid bot to offload repeating work? Let's not forget that it was Tesla who initiated this EV wave that forced all other legacy automakers to embrace the EV trend, whereas GM's corporate culture is well known to consistently focus on profits and cutting down costs at the expense of car quality. If you, as a consumer, bought a GM car and found out that the car quality just sucked, you're probably gonna be very angry. I mean, a good yardstick would be, if you work at a company with a slow and bureaucratic culture, do you think the company can easily thrive in the future? Very unlikely, right?
Right?
Into the next segment. My final thoughts. The next time someone says investing in blue chip stocks means a sure win 100% guarantee, you better go smack the fella's head. There's no such thing as 100% guaranteed investment in life, unless it's a US Treasury bond. So, should you still invest in blue chip stocks then? It really comes down to your personal objective. If you are a retiree who is looking for a consistent dividend income stream for your life, there are some hidden gems out there for sure. Just be careful of those high dividend yield trap companies like Astro, Hapsing and others. But if you are at the stage of compounding your investment, just search for companies that you think can create lots of innovation value and solve major problems for the world. One thing for sure is, there's no such thing as invest and forget forever. But if you're a beginner who just started to invest and not too sure what to do check out my recent video on StashAway's thematic portfolio that may help you in your beginner journey. I'll link it up here and in the description below. Now, do you agree with my findings? Make sure you comment your thoughts down below, and I'll see you in the next one.